Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So today there's a ton of things that I want to talk about, so I'm going to break a bunch of videos down into some short form content. Starting off with this, I want to look at the higher time frames, looking at Bitcoin, the total cryptocurrency market cap, and the altcoin market cap. We are literally sitting on the brink of a collapse at this moment in time, and I'm going to let you know where's the last line in the sand before that imminent meltdown to the downside. So first of all, let's start off over on Bitcoin. I'm looking at the Heikin-Ashi candles right now, and you can see on the monthly time frame, basically ever since the top, we've just had an absolute meltdown to the levels that we're at right now. And if we do draw a double Fibonacci from the lows in 2018 and also the lows after the March 20 capitulation, pandemic, whatever you want to call it, you can see we've got a double 786 Fibonacci box right here. If I take this off of the Heikin-Ashi so we can really see what's going on right now, you can see as of the time of recording, Bitcoin is currently sitting underneath both of these 786 Fibonacci's. More specifically, I mean, we're literally touching it. Like, we're really struggling for the past 12 days or so. You can see we have been stuck and residing just underneath this Fibonacci set. Now, if I zoom out once again, monthly time frame, we are in an absolute meltdown right now. We had a bearish engulfing candle down into new lows, and as we're sitting underneath this 786 Fibonacci, and as we're literally sitting beneath this Bitcoin low and this Bitcoin low over here, 17,250, it pretty much looks like we are absolutely screwed at this moment in time, and we're really getting ready for that final meltdown to the downside. Now, if you do watch the channel, you know that I uploaded this video yesterday, This Week in Crypto. If you haven't watched that already, I definitely highly recommend to watch it. I'm just going to really quickly let you know that there are a ton of important economic data coming out this week. There's not going to be too much more economic data. There's not going to be much more Fed commentary. There's not going to be any more FOMC meetings or CPI reports, inflation numbers, other than what's happening this week. So all of the economic data that we've got coming in this week is extremely important, starting off today with the 10-year note auction. Like I said though, let's get back to the subject at hand. I just wanted to let you know I do believe this week, with all this economic data coming in, this is probably going to give us the kick to the downside that we finally need. So let's check out some of the momentum indicators right now. I really wanted to focus on the squeeze momentum indicator and the MFI, but I will also let you know what is happening over on the stock RSI. Let's get rid of the stock RSI first, and we'll add that back in just one second. So if we are looking at the squeeze momentum indicator, you can currently see that we've basically reset to the heart line, meaning, you know, we're in a bearish trend, we reset back to neutral, bearish trend, reset back to neutral, and it kind of looks like we really want to tick over to that bearish territory. Now, over on the MFI as well, this would give further consolidation, or this would give further reason why the squeeze momentum indicator would get ready to snap back down to the downside, because if we are looking at liquidity conditions specifically for Bitcoin, obviously the MFI is very similar to the RSI, but it counts the volume over extensions in the market, and it's not just volume over extensions in the cryptocurrency markets. I'm going to make a separate video about this a little bit later on. Global liquidity conditions, E-mini future conditions for the S&P 500. Liquidity conditions all across the markets are just running into these very overextended levels right now. So the MFI is giving credence to the squeeze momentum indicator. The squeeze momentum indicator is kind of saying, hey, we're pretty much neutral right now while we're sitting underneath the 786 Fibonacci. And you can also see, if I come over to the daily time frame, it's very ugly, but we do have something reminiscent of a bearish pennant, bear flag, more like a bear flag at this moment in time. If we draw the price target of this out for Bitcoin, bada bing, bada boom, this would take us down to about 11,200. I personally don't think that's going to be a target for the immediate short term. If you do watch my videos, I think we're coming down to 14,000. If you basically kind of draw out these data points over here, we've got tons of data traded at 14,000 all the way down to about 10,000. So this is going to be a big range in my opinion. And at least in my opinion, I think we're going to come down to 14,000, probably 12,000 or so. And I think we're going to reside here for quite some time before coming back down to 10,000 that we were at around about the 31st of August 2020. There are also lots of volume profiles built down here, and as you can imagine, if I kind of draw from where we peaked out in the 2017 top, and I draw this all the way out here, you can see not much data traded, no data traded, no data traded, no data traded, straight line up to the upside. So we've not spent much time residing around these levels, and as a lot of these momentum indicators are looking like they want to turn to the downside, I definitely think this week is going to be the one where we finally start rocketing to the downside. Now, I do often look at the stochastic RSI. I really like to use this on the daily. I'm not the biggest fan of how this works out on Bitcoin on the higher time frames, and I'll show you why. If we look over here, stochastic RSI, the tops work out pretty well. Like the tops definitely work out, but if you come down to the bottom, you can see over here, we basically approached zero and the lines actually crossed bullish. What happened after they crossed bullish? Well, we're at 51,000 and we nuked all the way down to 33,000. So, you know, sometimes the stochastic RSI in a bear market isn't always the best indicator. A lot of the time, we just break down monumentally, and the stock RSI is like, you know, we're so beaten down at this moment in time that we have to flip bullish. But obviously, bear markets have their own plans. You know, tons of data can come out that the stock RSI cannot necessarily take into consideration. You can see over here we had a slight crossover on the stock RSI. When did we cross? At 30,600? And you know, right now we are crossing and pushing up a tiny bit, but you know, looking at the rest of the momentum indicators, we're sitting underneath the 786 Fibonacci. We're overextended in terms of monetary conditions in Bitcoin. We're overextended in the S&P 500, and we've also got tons of economic data. Like I said, check out my most recent video this week in crypto to learn more about that. But in general, you know, monthly time frame, Heiken-Archies, you can just kind of see we are absolutely on a meltdown to the downside right now. So let's come over to the total cryptocurrency market cap. The total 1 and total 2 are very, very similar to the Bitcoin chart. You can see for the total cryptocurrency market cap, you've got your 786 Fibonacci right round here at 733 billion. We're currently residing at 798 billion, which kind of means, hey, you know, if we break down about another 8 to 9%, we will be breaking down into new lows. And you can actually see when we did break down a couple of weeks ago, 21st of November, and we also came very close on the 7th of November down here, you can see we had a very nice double bottom on this 786 Fibonacci. So, you know, when you're looking at the total, when you're looking at Bitcoin, we know that Bitcoin highly respects these Fibonacci levels, and in my opinion, this is probably the reason why we've just taken a little bit of extra time to break down into new lows while we're residing at these levels. You know, we're quite not ready. You know, we need this economic data to come out this week that will finally get us ready to push back down to lower levels. Now, you can see I've highlighted over on the left side of the screen, you can see these are my volume profiles. They tell us where the most amount of volume was traded and when there's lackluster areas of volume. So if you look, I've highlighted in red, I've dragged this box out. The red means that there's not much volume traded around these levels. And then you can see over on green, you can see there are liquidity clusters. And a lot of the time, you know, we grab liquidity and push back down into this red box, which I pretty much like to call no man's land, because, you know, we haven't traded here for a very long time. And as you can see, you know, we just touched it for like a week or two. And then when we finally came back to it, we just absolutely ran through it and spent no time trading here whatsoever. So the thing is with the volume profiles is where you've got areas of lots of previous data traded, you spend a long time trading around these ranges. I mean, look at all of this volume traded around here. And as you can see, you know, we just spent absolutely months, years trading in these levels. What happened as soon as you snapped above this area where there's no liquidity? Boom, you just take a massive run to the upside, and the same will happen to the downside. We're currently in no man's land, and in the next week I do believe that we're going to start getting booted back down to the downside. So we've only got about another 9% to go to the downside for the total cryptocurrency market cap before we really do start melting back down to the next volume profile that I've been talking about for quite some time. It's about 29% drop from where we are, 30% to be precise. So this is kind of what I see playing out for the total cryptocurrency market cap. And when we come over to the altcoin market cap, the last time we made a video on this, we were actually all the way up here predicting a 31% drop down to the 786 Fibonacci. Let's see how far we've gone down. So as of the time of recording, we're about 18.5, 19% or so down from the previous video. We've had a nasty breakdown from this bear flag. And once again, you know, when you're looking at your MFI, whether you're looking at your squeeze momentum indicator starting to flip bearish for, you know, the first time in quite a while for altcoins. So this could get really, really ugly very, very soon. And you can also see drawing a line of best fit. You know, I'm not trying to line this up as a trend line. Once again, I'm just really highlighting, you know, we've got a top over here, we've got a lower high, we've got a lower high, we've got a breakdown, we've got a lower high over here. And I'm not sure if I did this for the total cryptocurrency market cap over on the money flow index. Boom. you can see the very, very similar situation. This one is a little bit more trend liney, but you can see, you know, rejection, 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 breakdown, rejection. So a lot of the momentum indicators are starting to turn bearish, and for your total cryptocurrency market cap, you're sitting on the last line in the sand, and for your total altcoin market cap, you're really sitting on that last line in the sand. So this is all I've got for this video. Like I said, just wanted to update you on the higher time frames. It really does look like we're getting ready for that final brutal meltdown to the downside. I will keep you up to date, of course. This is very hinging on, you know, CPI data that comes out this week, what the Fed commentary is going to be like, how the FOMC plays out, how the bond sales turn out today. If you want to learn more about that, then be sure to check out the last video this week in crypto. But for today, my friends, that is all I've got. Remember, we're literally sitting on the brink of death right now, between the levels of 17,250 up to 17,800. This is your double 786 Fibonacci. If we do not get above this soon, and I do not believe we will, we are probably doomed to ping down to this 14,000 level that I talked about in my previous Bitcoin video. So that's all I've got for you for this episode, my friends. As always, if you do enjoy the content, make sure to let me know by leaving a like, comment down below, share the videos with your friends. As always, cowboy out. Peace.